So, and that's why the indicators is so important, because the indicators, they let us know what the ATR is already. So we don't necessarily just need this line, because here we got ATR up here, which is 2.64, and then we got the SDTR, which is 0.87. So all the average true range is the price that the stock is subject to move on the average. So mine is based on an average of either 20 days, or sometimes I move it to 5. So like right here it's set to 20 days. So if I go back in and I change it to a 5-day period, it'll go from 2.64, still 2.26. So pretty much still the same. So usually I'll just go back just to give myself a little bit more room to breathe. I'll just keep it at 20. So I want to know what's the average true range in the last 20 days.
Okay.
All right. So here also customizing. We got high standard. We got low standard. We got the high ATR, and then we got the low ATR. So as you can see, the high ATR is dotted.
Yep.
The low ATR is style is dotted, and then the rest is kind of solid. But the way that the way that we use it is, whenever we pull up a chart, the ATR let me know, well, okay, Exxon here is subject to move $2.64 either up or down on an average day, on an average of 20 days. So then, then we'll subtract that SDTR from it to kind of give it, just to tighten it up a little bit. So that way we're not really, just tighten it up so we have a little bit more room to breathe. So if you subtract that 2.64 and then we subtract 87, we know for a fact we'll get like $1.80 move out of Exxon, regardless if it goes up or down. So it opens up about 190 gets you up to 110.50. So how I like to play this is as price targets, and also it gives me the indication of just a range of, like, say for example, if the low is in for the day, like if we look at NEO, I see NEO had a big reverse. But I want to catch something really bouncing off the ATR real quick, because the lower the ATR on NEO is pretty much down here. It's subject to move 90 cents on any given day. It's not a big move. What had a good move? Let's look at the Qs. Let's look at the Qs. Let's take the drawing off. Alright, so if we're looking at the Qs and we say, alright Qs, what's going on with the ATR today? Well, we got the high ATR up here, we got the low ATR down here. And we really pair the ATR with the Ichimoku cloud. It's a whole lot better, but I put mine with my VWAP chart just because it gives me more significant levels to look at. But and the Qs are choppy. I don't even want to use Qs. Give me something good. What was PFE? Okay, PFE. I want something where it could really. All right. So if the low of the day is in, because I usually like to play the bounces.
Okay.
So if the low of the day is in, how high, based on ATR, can the stock get? So when I called out PFE, I kind of just seen the setup going to where, okay, if the low of the day is in, where it's kind of just moving sideways here, it kind of just bottomed out, right? It's not really moving, even though the ATR says we could get here, but it's kind of jiggling around this this level right here, and I said, okay, well, if we get a VWAP break here, the next ATR point is here. So they're just points of significance to me of how far the stock can actually move on any given day. And based on the indicators pull certain data aggregation from the market that lets us know that this could be a potential buy. If it were to come down here and bounce off of this lower ATR, then green to me would mean to buy it. And if it was to break above VWAP and actually get to ATR, because it's the average true range, it most likely is not going to go higher than this, and it's most likely not going to go lower than this on average. Right? So even if it's sinking, it's selling off. If it hits here, if it reaches this point, there's a good chance that it's going to bounce back. And that's just based off the average true range of how much this price movement actually move on the average of 20 days. So even if we do get a bounce back above the VWAP, then I know once we get across the VWAP, then my next standard deal, of course I'm looking for multi-day, and you can kind of see multi-day running across this line, this little region. I'm looking for this next point of resistance before I can even get to my multi-day. So I got a couple barriers in there. There's some invisible lines in there that, even though the blue line to orange line is the strategy, there's a few lines in there I need to pay attention to. Like, especially if I'm looking at the scanners, if there's a scanner alert that comes out, I need to see, okay, what's the ATR on that? Is it below the VWAP? Is there any barrier in there that's going to stop me from getting to the point I'm looking to get to? So that's pretty much the only way we use the ATR. Well, how I use it is it just lets me know how much that stock is subject to move. Like, let's say I bought, PFE came down here and the low of the day was in here based off of ATR. Then I know my next point, of course, I'm going to be looking for the VWAP. But since we got here, then there's a good chance we're probably going to bounce back up from here.
Yeah.
And vice versa. And that's just based off the average true range. So, if it breaks below this, then, something's seriously wrong. And that would give us an indication to stay short, of course. Because it's unusual activity at that point. It's going a little bit, stretching the average true range.
Yeah.
So it's definitely oversold at that point. But for the most part, that's how we use the ATR indicators. This one I'm not too familiar with. I've never used it. But I've always been familiar with ATR and the Ichimoku cloud as a pair. So